Hello. What's it? What are we called? Well,
right. This time we're going to be talking about a market crash in the Western world, and because we've had a bull market for 6 to 7 years, and we're thinking that maybe there's going to be a correction.
Could be, yeah.
Yeah. Well, how much is the correction?
It's like 15%.
Right. Okay. I just wanted to double check that because I wasn't quite sure. So what do you think? What are your views, Scott, on a market crash?
Well, I mean, what did you mean?
Well, you were asking about.
Well, I'm telling you about. Well, what I'm talking about is that a lot of people, what I've read and what people are talking about is that there's going to be this massive crash, and everybody's panicking like the world's going to come to an end because of finances. And I mean, grass is still going to be there, trees are still going to be there. I mean, at the end of the day, we're still going to be living, even if we got to go and eat rabbits and deer. You know what I mean? At the end of the day, how bad's it going to get?
Well, we've had loads of crashes, and there's been, and
everybody's still got to have a car. Haven't they?
Yeah, and
everybody's still got to eat. They want to keep the world going.
That's right. And all these companies, even if worst case scenario, if people say there's a big crash, great. It could happen. It couldn't happen. A correction, whatever. It just pays not to lose your nerve. And most of the companies that you're in, a larger company, we tend to gravitate towards larger companies. I'm saying larger,
plus,
a billion plus. We don't like to. We're not into usually startup companies, microcaps and things like that.
I guess some people call it microcap now.
Yeah,
I don't know how it's classed anymore.
No,
it keeps changing all the time.
But most of the companies keep going. Even the financial crash we had in like 7, 8, and 9, and all that in America, in Britain, and Europe. All those banks are still there. All those things mostly have recovered.
There's some banks that went down, right? That's why you need a varied portfolio.
You do.
And you want to pick out the best companies that you can, because they're the ones that are, at the end of the day, some of them are not even going to be affected at all. They just carry on
and keep paying the dividends regardless. They've got products that can weather storms. It doesn't really make a difference to them. By the way, just going to slip this one in. It's not that I'm going to keep talking about this one today, but one of my UK big buys is a distressed company called Lloyds Bank. I've been in it for years. Now all these stocks that I buy or Scott does options on, we're not in love with these companies.
Shares as well.
We buy the shares as well, but we're not in love with these companies. We're just doing financials, and we always look at companies, don't we? And we look at them, and then we say, look at the financials and do our due diligence. But we also say, stand back and say, open our eyes and look at these companies and say, what are they producing? What are they actually doing that says to me that this has got legs? Can it keep going?
Absolutely, yeah.
If it hasn't got any legs.
This is the thing, like with Toys R Us right now, right?
Right.
Now, Toys R Us was a fantastic company, but
20
it's
years ago,
not necessarily for
fantastic.
me. And it's been written many times before. You think about like toys, stuff like that. It's all great. It's you got dolls and all that, but it's all obsolete. Like the Furby, who guys knows now? Now you got to find another product to sell.
And then you got with Toys R Us. It's a bit like the what we were talking about. A couple of episodes ago, we were talking about the fact that Netflix came along and absolutely annihilated Blockbuster. All the stores are gone, right? There was a time when Blockbuster was taking over everybody, eating them up like all the video stores, everything. But now they were eaten up by Netflix. Really, I know there were others included
who did it, right?
That's right. But
Netflix,
I'm just saying the big one.
That's a good one. I like that myself.
I know you do. Once again, internet company for you.
That from 2002, 2003, it's gone about 24, 25 times. I mean, that's some good money making there, I tell you.
Yeah.
I like the sound of that.
Right, let's not.
Okay, sorry, we're deviating. Carry on.
Where are we going back to? Where were we?
Market crash.
Market crash. Okay, let's get back there.
Yeah.
Okay, so so if there is a market crash and or a correction, so like I say, most of the stocks you see, you just hold on to them. You got mostly blue chip companies. You've got a few,
Yeah, and I think the best way to really see yourself through the corrections and bad times is just to know that say like you have a good spread of companies that you know that are going to be there. They've always been there. Say like Walmart, for instance. People buy groceries there. They buy all sorts of stuff there. Or grocery stores like a Sobeys or something like that. At the end of the day, everybody's got to eat still. Right? Yeah. Maybe they have to cut prices or whatever they got to do, but they'll keep going.
And their dividends will still be there.
As long as they're a good company.
Things can go up and down in their dividends and things like that, but those companies will keep going because people will still keep eating. There's lots of things that people need and never stop needing.
Yeah, I mean, it's just like, think of a company as like a household. You know, if you keep your debt low and your income coming in reasonably well, you're going to keep going. You're not going to have a problem whether it's a bad time or a good time.
Yeah.
You know what I mean? So I mean, it's same idea with the company. Really, it's just to simplify it. You just want to see assets increasing, debt decreasing, or at least staying the same, especially when bad times come through, right?
Yeah.
And then just hold on, stay steady, don't panic, don't worry too much about it. You know, and if you have to sell because you need some money, you know, do it because you have to, not because you
just
want
sell
to.
a proportion. You haven't got to sell everything, have you?
Yeah.
You just, you know, reduce your holding. That's all in certain companies.
And it's also a fantastic opportunity to go in and start buying some more, right?
Which is what I like doing. Once again, I'm looking for distressed companies, not problem companies. I mean, I bought a range of companies in the UK.
Yeah.
I'm talking 10 years ago now, and I'm noticing that, you know, big funds are now buying in, and because they're buying in like 8 or 10 years after I bought in. I'm a 10 bagger already on these stocks, and they're just going in because they think they're good stock. Fantastic. It's like now there's a great guy apparently in the UK called Neil Woodford. He's like one of the top fund managers over there. He even has his own fund, funds. They're buying into Lloyd's.
Where's Neil Woodford from? Where's he from?
UK, if the United Kingdom, yeah.
Oh, okay.
From Great Britain.
There you go.
Yeah.
Okay.
There you go. Just because you lived here too long now.
There you go.
Okay. But anyway, so, you know, he's a great star manager, but he's buying into things like I just mentioned just a moment ago, Lloyd's Banking, right? They were a distressed company once again, and they just went in the financial crisis. They ended up 43% owned by the British government.
Yeah. Which not anymore. They've got themselves out of it.
That's right. But I like to, because I saw him distressed. Now, if you know this is how my mind's working. Simple thing, not being clever. I went into it and I looked at it and I thought, well, if the government's buying 43% of the company, they're not going to let this company go down. It has too much of I won't say a stranglehold, but it's got its tentacles in every fabric of society.
I stopped you there. It wasn't the only deciding factor, was it?
No.
Because what was that guy that was running Santander? Santander, is it Santander?
Yeah, he came in. He actually turned them around.
He turned it around.
Yeah, the guy from Spain. Yeah, Antonio, something. I can't remember his name.
I don't know. I'm thinking Banderas.
No, it's not him. Not him. It's.
I don't think.
Hang on, I got a good moment to go and get this name because he's the CEO and actually has done marvelous things for Lloyd's, and he's brought them through. He's brought a lot of fintech in,
and they've bought a lot of companies as well now.
Oh, they bought MBNA.
Yeah, and so here we go. We're turning that. It's now going into a different sector, into a different sector. Sorry, into a different phase. Yeah, of growth. Pretty much. They're trying to grow the company now, right?
Yeah.
So they've got rid of all the problems.
Well, this is in 2007, 2008. The company's nearly going. It's not going under because the government have picked up 43%, but now they've paid back that. I mean, we're talking billions, and they've had other scandals.
I just want to ask you one question. How long has Lloyd's been going for?
I think it's 250 years.
250 years. Do you think they've had a crash? Absolutely they have. Are they still here? Of course they are. Right. So as long as you've got a good company, you're going to be able to sift your way through these problems, right? And through the bumps and the dips or whatever they call it, peaks and valleys. There we go, peaks and valleys. Troughs and peaks and valleys. Don't worry about it. Long term, stay strong on it. Don't panic, you know?
Yeah.
As long as the story stays strong, which mostly in banking is pretty good.
Yeah. But that's, you know, I would always recommend having some sort of, you know, when you're doing a structure to your portfolio, once again, we are talking about these companies and saying, you know, you need to diversify, but it's good to have some banks in there, some blue chip banks.
What they call core holdings, right?
Yeah, exactly.
Something that's going to give you some base to your whole portfolio.
Yeah.
You know, I wouldn't want to really invest in anything less than around about 15 companies.
No.
That being said, I wouldn't want to go any more than 100 companies. I mean, you know, but that's quite a lot as well. So
it's a lot to keep monitoring.
Yeah, it's a lot to monitor. If you want to monitor, I've bought lots of companies and thought, you know what, I don't have time to follow all these companies all the time. And when things happen, you think, oh, what's going on there? But you might have known about it. Now, when I say monitor, that doesn't mean second by second. That means that every week or two, you just read up about the information on the company and just say, hey, you know, what's happening today, and have they put any news out from the company, not news from, you know, like tabloids and things like that, saying, oh, you know, fraud and all that sort of stuff. But you want to be looking at see what the CEOs are saying. Are they looking to say it's very positive. Another thing that I do like to do is I sometimes call up the companies, and you know what, if they start sounding and they seem to be very, very excited about what's going on and prospects coming up, to me, that excites me, because
Well, actually,
I did that with CN, didn't we?
you did. I remember I asked you, when you phoned up CN, they thought you were an analyst and they gave you all the information. And I went out and bought a chunk of shares with them, and I made a good bit of money on them.
Yeah, we did.
But we'll talk about
but
that another time.
But they were very excited, yeah.
They were, and I remember you rolling up and they thought you were
they were
some video or something. But anyway, but it made a difference to me, and I bought a chunk, made a chunk.
Yeah, it worked out well. It more than doubled your money then.
Yeah.
And then it slowed, and then the story started to slow based on, because the information that we were getting was they were ramping up the transportation of oil. That was all the massive, great big thing, right? It was a couple of years back, and then as a slowly, oil started to crash, right?
Scott, this is on a whole new episode.
Oh, okay.
We're getting into it. Do you know what? We're deviating. We're going all over the place here, from one company to another.
But that's what I mean. The story started to change.
Yeah.
Right? You know that oil starting to cut back. It's going to obviously affect CN. It doesn't mean that it's a bad company. It hasn't stopped,
Fantastic.
even though oil
it's the
crashed.
backbone of Canada for
Absolutely,
starters.
anything that's going to be transported is going to be, it's that or CP. I mean, they're the two.
There's only two.
Well, CN owns all the bloody tracks, so anybody else that's coming on the tracks, they're going to be paying CN. So why wouldn't you want CN?
Yeah,
I'll take it.
That's what I did.
All day, every day.
But we're gonna put an episode of that in, obviously, because there's a lot to talk about there.
We'll have to write that one down. Make sure.
We will write that one down.
CN
It's not like we're obsessed with talking about stock market, is it?
No.
Okay. Thanks for looking. If there's anything here you found of any value, great. Just don't forget to subscribe, and it's free of charge. Just click on. See you next time.